for now. On to earnings now. Cognizant has seen a blowout set of numbers, pipping Infosys as the second largest IT player after TCS in revenue terms. Revenue coming in at $1.79 billion, which is higher than their own guidance of 4.6%. We're now joined by the president of Cognizant, Gordon Coburn, for an analysis of their quarterly numbers. Gordon, appreciate you joining us here on CNBC TV 18. You're continuing to hold out a guidance of 20%. The street was expecting a cut as far as guidance was concerned, down to about 18 to 19%. What makes you so bullish and optimistic? Where do you see growth coming in from?
We had a great quarter. Things played out as expected. We saw strength in financial services. Our pharmaceutical industry started to grow again. We beat our guidance both on the top line and EPS. But what we were most pleased about is, given the tough economic environment, and it is tough. The economy is fragile here in the United States. Obviously, it's very difficult in Europe. Given that, we maintained our full-year guidance of at least 20%. And maintaining that guidance included absorbing significant currency movements that happened since early May. So we absorbed over $20 million of negative currency movements and still maintained our guidance. And that's being driven by our clients looking to do two things at once: reduce their costs and spend on innovation and to grow their top line. And we're well positioned to meet that dual mandate, and customers are coming to us, and we continue to take market share.
Okay. Gordon, let me ask you about what pricing is actually looking like, because if we listen to what the commentary is from your peers, both TCS and Infosys have actually seen a pricing decline. You're saying pricing continues to be stable. Can you quantify the kind of pressure that you're perhaps seeing on pricing at this point in time?
Sure. So our rates were stable in Q2 in the June quarter compared to the March quarter. So very stable. We do see clients coming to us and saying that they need to reduce their costs. Now, there are two ways you can do that. You can cut your rates. We're certainly not going to do that. Or you can work with your clients to figure out how we can be more productive, how we can move more work to a global delivery model, and therefore reduce their cost of ownership without impacting margins. That's what we'll do, and that's the right thing to do for a client. So I think it really comes down to how each company approaches the client's need to reduce their spend. We've been doing it through productivity improvements, through value-add activities, and not through rate card reductions.
What's the deal pipeline looking like, Gordon? Because when we speak to companies like TCS, the commentary very different from Infosys. TCS says that they're seeing the deal pipeline looking strong. In fact, they expect several big-ticket deals to close as well. What's your own sense? And give us a sense of when you say big-ticket deals, is it 50 million plus? What's the kind of range that we're talking about?
Sure. So my view would be very similar to that. We are seeing a change in the market towards what we refer to as transformation deals, which are larger deals encompassing a broad range of services, a broad range of geographies, focused on how do you deliver change in operations to the clients. We won several of those this past quarter that we talked about our earnings call, one with Philips, one with ING US. There's clearly others in the pipeline. So I would agree with some of my peers who said there is a shift towards larger transformational deals, and we're thrilled by that. And we're well positioned to win those deals, particularly due to the investment that we've made in consulting services. Consulting is a very, very important part of winning these larger deals, because it's not just delivering the technology, but it's helping clients figure out how do they want to use technology to drive improvements in the operations of their business or improvements in how they interact with their clients. And we're very good at that. As a result, I would expect we'll win more larger deals over time, and our pipeline is robust with those sorts of activities.
You're sitting on a fairly fat pile of cash, Gordon, at this point in time. The strategy so far has been niche investments. Are we likely to see any big-ticket acquisitions, or will the niche strategy continue?
You're absolutely right. We generate a lot of cash, generate over $300 million from operations in this most recent quarter. We are returning some cash to shareholders. We actually accelerated our share repurchase program in the June quarter, and we repurchased over 6 million shares for about $350 million, and we've already repurchased another $50 million worth of stock this quarter. Even with that, we have meaningful cash. We use that cash for capital investments, particularly in India as well as other geographies, and we use that cash for tuck-under acquisitions. Our strategy, as we've articulated in the past, is to focus on tuck-under acquisitions, which we define as 20 to 200 million in revenue. They tend to focus either on geographic presence, industry knowledge, or technology capability. And I would expect we'll continue to do acquisitions in that range.
Gordon, thanks very much for joining us. Congratulations on another solid set of numbers. That's Cognizant delivering a very strong set of numbers, beating Infosys and changing the pecking order as far as Indian IT is concerned. Well, up next on What's Hot.
I would like you to look at our track record, what we have done in the last 1.5 years, and then come to a conclusion.
SEBI Chief UK Sinha says there's no political interference in its functioning. The government will fill the 2 available whole-time member seats on the board by the book.